Okay, Daily Trader TV, it's episode 24, it's the 16th of February 2018. Just remember, I'm not qualified to give you individual advice, and trading can involve taking risks where you could lose more than your initial stake. The question today is, what is trading on margin? I'm going to try to keep these videos somewhere between the 5 and 8 minute mark. So basically, trading on margin is, and I'll type this as I go, so margin is the deposit required to fund a spread bet. So we discussed in a previous video what spread bet was. So the margin is a deposit that's required, which means you don't need to put up the total sum. So it's expressed as a percentage of the notional value of the trade. So, for example, let's say I buy some stock at £10 per point. PP is per point, and the price of IWM when I buy it, 6540 spot 5. So the notional value is obviously £10 a point times all the points. So the notional value is £65,405. So let's just recap. So margin is the deposit required to fund the spread bet. If we were buying IWM in this example, it would cost us, if we bought the shares, £65,000. So most people don't have £65,000 to take a position in one trade. So spread betting allows you to trade on margin, meaning that the spread bet company is effectively giving you a loan, is the way to think about it. But you have to put up a deposit to take that bet. So let's say the margin requirement from the spread betting company is 1%. Now, if it's an indices will be somewhere around 1%, 1-2%, maybe even 0.5% for things like commodities, forex. If it's on a stock, it could be anywhere between, say, 3 to 30%. So if we work this through, so the margin requirement is 1%. So the money required, i.e. funds in spread bet account, needs to be 1%, which is £654 and 10 pence. So let's go over it again. Margin's the deposit required to fund the spread bet, because you're not buying the shares. If you remember from the spread betting video, we're not buying the shares. We're simply placing a bet on the shares going up or down. So the spread betting company will ask you for a percentage of the notional value of the trade. So in our example, at £10 a point at the price, the notional value is X, 1% of X gives you the deposit that you require to put into your spread bet. Now, this will lead on to probably one of next week's questions, which is, what is a stop loss and why is a stop loss important? It's particularly important for your spread bets. So that's it for today. Nothing going on in the markets, so I'm going to cut it right there.